Hi again everyone, I hope you're all doing really well. So like I've covered on this channel earlier this week and previously, there have been significant developments in terms of the Russian financial markets, particularly in this week, including the reopening of the Moscow exchange, some interesting action with the value of the ruble, as well as a raft of economic and financial responses from Russia in the face of the sanctions they have received from what they are deeming as unfriendly countries. So now that the trading week is over, at least for stocks, I thought it might be a good opportunity to stop and take stock of where things sit at the moment and discuss where they may be headed and give my thoughts on what's all going on. I will cover a fair bit in this video, but I will try to keep it brief. So let's get into it. So to start with, since the channel definitely has a leaning towards stocks, let's start there. The big news this week is obviously that the Moscow exchange has further reopened, still in a limited capacity. At first it was for the trading of OFC bonds, and then on Thursday and Friday, a limited trading session of 33 components of the MOEX index were allowed to trade, along with some euro bonds. However, there were limitations placed on this, with a banning on short trading on these 33 securities and very severe restrictions placed on foreign access to the markets through the previously issued Decree 81 by the Russian government. When the markets first opened up for trade on Thursday, there was a bit of a spike in the MOEX index for the first hour of trade, I think driven by pent-up local demand by particularly Russian retail traders hoping to get a bargain price on some of the country's blue chip stocks. Since then, there has been an eroding of these initial gains, with the market falling for the back half of Thursday's session to still close the day up at a respectable 4%. However, the continuation of this downward trajectory saw the erasing of more of those initial gains, with the MOEX giving up a further 3.3% on Friday, a sign of some domestic profit taking and perhaps a sign that there could be further to slide with these stocks. Friday's losses meant the market still closed up about 1% for the week, which was a bit surprising to those observing. Of the currently trading MOEX stocks, the biggest loser on Friday was Aeroflot, also known as Russian Airlines. Given that Russia is in a quasi-state of war, though far from being in a state of total war, a lot of travel and movement domestically and internationally is going to be restricted. Plus, add in the rising fuel prices, it is no surprise that the airline has been punished by the markets. What is kind of interesting, however, is that I did read an interesting article that the war has sparked a bit of an exodus by Russians, with train services between Moscow and Helsinki being sold out for weeks in a one-way direction. Obviously, there is a bit of demand for travel out. It makes me wonder if any of this may seep through to being business for the Russian national carrier. Probably not. Many of the larger stocks that I have been talking about on here before all had red days, including Sberbank, VTB Bank, Gazprom, Rosneft and Lukoil, all losing between 2 and 4% each. There were a couple of winners on Friday, with Fosagro and PIK Group or PIK Group respectively up 5.78% and 1.76%. Fosagro being Europe's largest producer of phosphate fertilizer and one of the main Russian exports that my native Australia receives from the limited trade relationship they have with Russia. Given Fosagro's dominance in the space and all the chatter about problems with food and crop security that has come out in the wake of this ongoing conflict with Ukraine, there seems to be a pent-up demand, and I'm guessing an escalation in the value of the products produced by Fosagro. In other words, clearly there is still strong demand for Russian fertilizer throughout all of this. It clearly is a product that has taken the back seat in all of the talk around Russian oil and gas. PIK Group or PIK Group's result is a little more interesting. PIK is Russia's and Europe's leading home building company, as they largely build new homes, particularly large-scale apartment construction. They have apparently built over a whopping 2 million dwellings in their history. Now, this is all speculation and me letting my mind wander in an attempt to rationalise why this particular stock was one of only two that managed to rise in a day of heavy losses. Anyway, I think the market may be looking down the pipeline at longer-term winners here. If there was to be property destruction brought on by war expanding into Russia, or Russia does happen to win and claim Ukraine as its own territory, or the war effort does fizzle out and Russia is in need of some sort of stimulus to reboot its economy, then PIK Group could stand to win some major construction contracts as part of the rebuilding effort in whatever shape or form that takes. Any residential contracts of scale, they would have to be the top candidate to land them. Anyway, it's just a bit of speculation. Let me know what you think about PIK Group in the comments below, if you know anything at all. So overall, like I said, the two limited days of trading still saw the limited MOEX index finish about 1% up for the week. And while the market now again appears to be on a downward trajectory, it is perhaps still a surprising result on the surface. However, there is more at work here. I think the greater than expected faith that was shown in the Russian listed stocks is a result of Putin and the Russian government's ability to take action to counteract sanctions from the West, particularly the effect these actions had on stabilizing the local currency, the ruble. While the ruble hit record lows earlier this month, it has been on a bit of a comeback, regaining about 10% of its value this week following 5 consecutive sessions of gains. Perhaps the most significant event that helped stabilize the currency was Putin's action to now demand that unfriendly nations buying gas now have to pay in rubles. This action alone is significant in counteracting the falling value of the currency, as by making it a requirement of exchange for Russia's leading export to many of its biggest customers, there becomes a greater demand for the currency as part of world trade again, thus pushing up its value, particularly against the euro, the currency that was generally exchanged in the trade previously. Now, I have covered my thoughts on the fallout of this move previously, and one of the main points I raised was that this move also undermines the role of the US dollar as the world's reserve currency. Well, further to this, the chief executive of VTB Bank, Russia's second largest bank, spoke publicly that his bank had been offering deposit accounts in Chinese Yuan and that they currently held the equivalent of 16 billion rubles in Yuan deposits, which is about the equivalent of 156 million US dollars or 142 million euros. Now, that doesn't seem like much in the scheme of things, but this is bank deposits that Russian citizens have denominated in Chinese Yuan in preference over another currency, i.e. euros or US dollars, and understandably so given the circumstances. This move does further build China's case for the yuan emerging as a challenger for the reserve currency to rival the US dollar. However, if this deposit program were to further expand, it could put China in an even trickier position with the West. As well, there is a temptation for Chinese businesses, and in this case the currency, to fill voids in Russia left by the West through government and corporate sanctions. Doing so could offside China with the West, who is, as a collective, far more important to the Chinese economy, and the reality is the longer-term effect of the sanctions on Russia could still be crippling, that if China was to get into bed with Moscow through all of this, Russia may not have the capacity to honour any of the deals that may be struck, leaving Beijing to pick up the bill. Anyway, back to the currency situation. Sberbank also announced on Thursday that they expect a great increase in demand for exchange of the ruble-yuan pair in the future. So we're seeing a bit of a trend emerge here. When we also factor in that Moscow has implemented limits on funds being exchanged out of Russia to unfriendly countries, that is approximately the equivalent of the limitations that the West had placed on Moscow previously, we have seen a further reinforcing of the ruble throughout the week. Given that there is a return to the value of the ruble, albeit at an already devalued level, and the restrictions placed on trade and exchange with global markets, Russia has been able to at least temporarily stave off the effects of the sanctions placed upon them. And as a result, there has been a sense of stability achieved for the currency at the current levels, and I think this has flown through to the securities being traded on the Moscow exchange this week. Now, the results may have been a little surprising given the talk on how harsh the corporate and government sanctions have been towards Moscow, but it is not altogether surprising in the sense that the Russian economy has already taken a big hit from this crisis, and you had to expect that whatever reaction and responses Moscow had to the West were going to have some supportive effect for Russian markets and businesses. Anyway, it will be interesting to see what twists and turns all this will have for the Russian markets after the weekend. I, for one, am enjoying following it all. Anyway, let me know your thoughts on everything that is happening in the comments below. If there is a stock you'd like me to take a particular look at, mention a ticker symbol in the comments below and I'll see what I can do. Till next time, everyone, may the markets trade in your favour. Cheers.